At Guaranteed Income, I'm very pleased with our relationship with American Independent Marketing, one of the premier long-term care marketing companies in the United States, and we're very happy to be invited to be on today. I hope you all can stay on to the end. This is scheduled to last approximately 45 minutes, and I have a very special reason that I want you to stay on till the end. And kind of let me lay this out for you a little bit. LIMRA has told us that there's approximately $1.8 trillion in non-qualified annuities in America. Close to a third of that is out of the surrender period, and for the first time in the history of the annuity industry, this money is not moving. It is stagnant. And the reason it's not moving is because these annuities have the old 3% guarantee. They're out of the surrender period, and why would a client want to move a 3% guarantee, no surrender period annuity into a new annuity that with a lower guarantee and a surrender period? Folks, today, toward the end of this webinar, I'm going to show you exactly how to put that money back in motion. Now, it may be your client who's wanting to stay at that 3%, or it may be your competitor's client, but I'm going to show you how to put that money back into motion. So with that, let's go ahead and get started. We're going to talk about three products today. Primarily, we're going to be talking about AnnuiCare, which is an annuity that triples in value to cover long-term care expenses. So, for example, if somebody deposited $100,000 into the AnnuiCare annuity, they would immediately have $300,000 of tax-qualified, tax-free long-term care benefits, a 3-to-1 benefit. We're also going to be talking about a relatively new product called Flex Plus with Bonus Care 10. Now, this is a product that generates real additional dollars to help offset long-term care expenses, but it's guarantee issue. Everybody can qualify for this one. And then at the end, I'm going to give an honorable mention about our 4-year multi-year guarantee. And the charm in this product is that it is issued all the way through age 100. So with that, let's get moving. Pardon me. I'd like to start out by talking about the crisis we're seeing in the traditional long-term care industry. You know, we've gone through and are still in a 5-year historical low interest rate environment, and interest rates are one of the factors in pricing long-term care products. At the same time, nursing home costs have been soaring. It was estimated last year that the average stay, a 1-year stay in a private room in a nursing home, tipped over $90,000. And we also know people are living longer, and of course the boomer generation is going to live longer than the generation before them. And because they're going to live longer, there's a greater possibility that at some point they are going to incur long-term care expenses. As a result of these things that are happening, you know, long-term care premiums have been increasing dramatically, and it's not unusual for your client to get a renewal notice showing them that their premium went up 50% and sometimes even 100%. And underwriting has tightened significantly. For example, somebody who was, let's say, age 60, 10 years ago, applying for long-term care might have found it very easy to qualify for. That same 60-year-old in the same health condition today may find it more difficult because of the tightening of underwriting. So as a result of all of these kind of negative influences that we've been dealing with in the traditional long-term care space, many traditional long-term care insurers, and I'm talking about iconic companies, have withdrawn their product entirely. So what is the solution? Well, we believe that the AnnuiCare, which is an annuity that also provides long-term care, is going to be the solution for many of your clients. The graphic on the right is the AnnuiCare brochure. I wish I could just open that up and kind of walk you through it, but instead I'll describe it. It goes right from the concept right through to the close. This is a point-of-sale piece. It's approved in all the states that Guaranteed Income does business in, and it'll help you make that sale. Now, getting down to the nuts and bolts, AnnuiCare offers 3 plans to choose from. AnnuiCare 10 is what we sell the most of. It's on a 10-year chassis. It's issued through age 79, and the current rate is 3%. I think you'll agree that that's a very competitive interest rate in today's environment. Now, for your older prospects and clients, we have AnnuiCare 7, issued through age 85, and the current rate is 2.75%. And we also have AnnuiCare 5 on a 5-year surrender period, also issued through age 85, and the current rate is 2.5%. Now, talking about these rates, they're going to move. And the reason they're going to move is because we use what's called a portfolio renewal rate style. And what that means is as interest rates trend up, the renewal rates will trend up as well. Well, on the other side of the coin, if interest rates trended down, the renewal rates would trend down. I think we all agree we're pretty much at the bottom of the barrel in terms of interest rates. So if there's going to be a trend, it's probably going to be upwards. And the point, I wanted to make that point because these interest rates you're looking at right now could very easily be significantly higher in the next 3, 4, 5, 6, 7, 8 years. So they're not stuck at that current rate. Now, AnnuiCare is the original annuity-based long-term care. We were the first people to introduce this product in the United States. It's offered exclusively by Guarantee Income Life, and it is specifically geared toward both annuity and long-term care producers. And I think it's worth repeating, this is the first annuity long-term care product issued in America. Now, you may ask the question, why, back in 1999, did Guarantee Income create an annuity with long-term care benefits? Well, here are some of the reasons why we chose to do that. We learned that 85% of Americans aged 65 and older have no form of long-term care insurance. Now, if you drop down into the late 50s to earlier 60s, that number's more like 90%. So what that means is 9 out of 10 people in this country that should own long-term care have chosen not to buy long-term care. So you have to wonder, well, why are they not buying it? Well, a couple of good reasons. One, it's become increasingly expensive, and for some people it's just cost prohibitive. We've also seen underwriting tightening. It's become rigorous and lengthy, and a lot of people, like I said earlier, that may have qualified easily 10 years ago would find it maybe more difficult to qualify today. And those are good reasons. But at Guarantee Income, we believe the number one reason why seniors don't buy, or 9 out of 10 seniors don't buy long-term care insurance is because they don't want to pay for something that they may never use. So we have a consumer mindset that has to be dealt with to solve this problem, and that mindset is it's a use it or lose it proposition. By that I mean if you don't use your long-term care benefit, you've lost your premium. So seniors are reluctant to pay for something in their minds that they may never use. AnnuiCare solves that problem, and I'm going to get to that in just a moment. But here's the end result. The majority of retired Americans are self-insuring for their long-term care needs and essentially gambling with their life savings. You can imagine with nursing home costs approaching now as high as $100,000 a year, how long would it take for them to use up their retirement savings if either Mr. or Mrs. or both wound up needing long-term care? Now that term, self-insuring, is very important because remember, 9 out of 10 Americans have chosen to self-insure. Well, we decided back in 1999, why fight them? You can't fight 90% of Americans, so we decided to join them. And AnnuiCare, we developed this because it's a better way to self-insure. It's one where your client's money is going to be safe. There's no market risk. They have liquidity. Because it's an annuity, it grows tax deferred. But most importantly, it triples in value to cover their long-term care needs. Now, I'm going to introduce a sales concept to you, and this has been used by some of our top AnnuiCare producers across the country. And sometimes if you compare something a person's unfamiliar with to something that they are familiar with, they're going to get it, and it makes it easier to make a buying decision. So I'm going to compare AnnuiCare to a bank. Now, I want you to imagine your prospect that's self-insuring. Let's say maybe they have a net worth of $800,000 or $900,000. That's their retirement nest egg. And they've decided, okay, we're going to put $200,000 over here someplace in a safe place. And just in case myself or my wife become ill or injured and we incur long-term care expenses, that's going to be our $200,000 we're going to go to cover those expenses. Now, I want you to imagine this, the same person who's self-insuring with $200,000. Imagine that they have that money in a big black bag and they're standing on the street, which is probably not safe to be standing on the street with $200,000, but their intention is to put it in a bag. They're standing on the street. They see two banks. A bank over here on the left, it has a sign in the window. It says, deposit your money here. It will be safe. You'll get a fair rate of return. Now, if you should become ill or injured and you need that money back, you may have to pay a little penalty, but for the most part, you can take your $200,000 back out of this bank and use that to cover your long-term care expenses. So what did I just describe? That's a typical bank CD or money market account. Now, the bank over here on the right has a similar but slightly different sign in the window, and that sign reads, deposit your money here, it'll be safe, you'll get a fair rate of return. But if you should become ill or injured and incur long-term care expenses, you can come to this bank and not just withdraw the $200,000 that you deposited, but over a 6-year period, you can withdraw 3 times that much in this case, $600,000 to cover your long-term care expenses. That would then provide you $100,000 a year tax-free for 6 years to cover your long-term care expenses. Now ask yourself this question: if you were that prospect and it was your $200,000 and you didn't own long-term care, which bank would be the obvious choice for you? So folks, sometimes again, just relating something that people are very familiar with to AnnuiCare is going to make that sale go just a little bit smoother. Now I mentioned earlier that the number one reason we believe that seniors do not buy long-term care, 9 out of 10 of them, is because they just don't want to pay for something they might never use, and they've got that use it or lose it mentality. Here's how AnnuiCare solves that problem. If your clients don't need to use their long-term care benefits, they can get their deposit back plus net interest. Or if they were to die without using their long-term care benefits, 100% of their annuity value plus any net interest will be passed on to the heirs. So what have we accomplished here? Well, we've taken that use it or lose it mentality and we've changed it to benefits if you need it and your money back if you don't. Folks, it's a win-win proposition. Now, I want to share a second sales concept with you. And there's going to be a third one, and that's going to be the big one. That's going to come a little bit later. Sometimes asking questions is more important and more effective than giving information to your prospects. So we took the AnnuiCare concept and we just put it into 4 questions. So, Mr. Prospect, what if I could show you a way to protect your hard-earned assets from the high cost of long-term care expenses? And while doing that, you could also maintain complete control of that asset. Should you have need for care, if you do get ill or injured, you will receive 3 times the account value, 3 to 1, to pay for those long-term care needs. And if you don't need the long-term care benefit, all of this asset, 100% of it, plus net interest, would be passed on to your heirs. So, Mr. Prospect, if I could do all of that with no out-of-pocket premium on your part, would you be interested? Folks, that's a very nice setup to the AnnuiCare sale. Now, right now, we're going to get into some of the nuts and bolts. We're going to talk about the concept, and I'm just going to explain to you the mechanics of how AnnuiCare works. And this is something we could make as complicated as we choose to or as simple as we like. But I think you're going to see AnnuiCare is a very simple product, easy to understand, so we're going to take the simple route. The simplicity begins right here. What I'm about to show you applies to male or female. So AnnuiCare is not gender distinct, which actually gives the females an advantage over traditional long-term care. Let's assume your prospect deposits $200,000 into the AnnuiCare annuity. The AnnuiCare rider will immediately reserve an additional $400,000 of long-term care benefit. If you add the two together, their $200,000 annuity, with the $400,000 additional dollars provided by the AnnuiCare rider, you'll see that they've leveraged their $200,000 deposit up to a $600,000 total benefit. What a great way to self-insure. Now, here's how the benefits are paid. For the first 2 years, the benefits are going to be paid out of their annuity, penalty-free. Now, don't see that as a negative because, remember, this is going to appeal to people who are already self-insured. And then for the next 4 years, the benefit will be paid out of the AnnuiCare rider, giving them a total of 6 years of benefit. So if you take the total benefit of $600,000 and you divide that by the 6-year benefit period, that you'll see that's how we calculate we are generating $100,000 a year tax-free benefit to cover their long-term care expenses for a 6-year period. Folks, that's just how simple AnnuiCare is. So more nuts and bolts. What does AnnuiCare cover? And those of you with long-term care experience, this is going to be very familiar to you because it's almost identical to traditional long-term care. It's going to pay 100% of the daily benefit for home health care, homemaker services, hospice services, maintenance, personal care, respite care, assisted living, Alzheimer's care, and of course the nursing home. It will even pay up to 50% of the daily maximum benefit for adult daycare. So the question, what does AnnuiCare cover? Well, it covers everything under the long-term care umbrella. The next question may be, what has to happen before you can go on claim? There are 2 different triggers. You only need one of these triggers to qualify for claim. Trigger number 1 is being unable to perform at least 2 of the 6 activities of daily living. That includes bathing, eating, continence, toileting, dressing, or transferring. Any combination of those 2 qualifies them to go on benefit. And there's a second single trigger, and that is cognitive impairment requiring substantial supervision. I know that's a mouthful, but it simply means for cognitive reasons, they cannot function adequately on their own for a reasonable period of time. That alone would qualify them to receive benefits. Now we're going to jump into underwriting, and I think this is the part you're going to like the most. We use a very simplified underwriting approach, and don't misunderstand me. We're not taking people who can't qualify for long-term care, but our underwriting process is very quick. For your clients that are age 69 and under, the entire underwriting process is a telephone interview done by a registered nurse. And if your client is age 70 or older, that same interview is conducted face-to-face. Now, we use the services, the underwriting services of the Long-Term Care Group. They are the biggest third-party underwriter of long-term care in the nation, and they've got a network of registered nurses across the country. They can get a nurse out to the Badlands of North Dakota if need be. That's the entire underwriting process. I think what you're going to like most about AnnuiCare underwriting is what we don't do. There's not going to be a blood draw, no urine, no medical exams, no lab work, no attending physician statement, no medical records. All of the things that slow down the underwriting process, we have eliminated all of those and replaced that with either the telephone or face-to-face interview. Oh, and guess what? There's no substandard ratings. If they qualify, they qualify. There's no ratings. They either qualify or they don't. And because of this very streamlined underwriting approach that we use, you can expect a quick response, and it's usually going to be 3 business days. So we can give you an underwriting decision typically within 3 business days of either the telephone or face-to-face interview. We're going to give you an underwriting decision 3 days later. So the underwriting is very quick. Now, the reason we do this is because we understand buyer's remorse. Every day that passes from the time they sign the application until you deliver and cement that contract is one more day for buyer's remorse to set in. So we like to get this process done as quickly as we can so that you can get the contract in your hands, re-explain the benefits of the contract, and cement it. So that's our 72-hour underwriting challenge, underwriting decisions usually within 3 business days after the telephone interview. Now I'm going to go into the AnnuiCare premium limits. And this is really pretty simple. For non-qualified money, the minimum deposit's $36,500. Now that's going to generate about a $50 a day room, and you may be thinking, well, where can you go to a nursing home for $50 a day? Well, you cannot. However, there's a lot of people that bought traditional long-term care years ago, and they held on to it. Maybe they got a $100 or $150 a day room benefit. They know it's not enough. They'd like to have more benefit, but they're either unable or in some cases unwilling to pay those additional out-of-pocket premiums. Well, they can just go find this underperforming asset in a bank, CD, money market account, or maybe an asset at risk they're concerned about, transfer that money into AnnuiCare, get the additional benefit they want, and AnnuiCare will pay right on top of their traditional long-term care. AnnuiCare also accepts qualified funds, and this is very important because roughly 80% of the investable assets in this country are in IRAs, 401ks, 403bs, TSAs, etc. So the minimum deposit for qualified, excuse me, minimum annuity deposit for qualified accounts is $50,000. Now you know it can't remain qualified. So let me give you an example of how this works. Let's say somebody has a $400,000 IRA and they decide, I want to use $100,000 of my IRA to fund AnnuiCare. So all that money goes into guarantee income, and all the benefits are there at one time. But we're only going to 1099 them for $20,000 or 20% this year. The following year, we'll 1099 them for another 20% and so on until after 5 years, it's no longer qualified money. So what we've managed to do with this maneuver is take that tax hit and spread that out over a 5-year period and hopefully keep them in the same marginal tax bracket that they're currently in. The maximum deposit for AnnuiCare is $300,000 per insured. And folks, that's going to generate $900,000 over 6 years of tax-free long-term care benefits. So, for example, if your client wants to receive their care, let's say, how about the Ritz-Carlton, West Palm Beach, Florida, with an ocean view room? And in today's economy, that's probably going to be enough to pay the bill. So those are the premium limits. Now I want to get into the fun part, and I want to talk about, we've gone through all the nuts and bolts. I want to go through the opportunity and the AnnuiCare advantage. The first advantage is AnnuiCare is Pension Protection Act compliant. By that I mean It earns tax-deferred interest. The premium, the amount of money taken out of the annuity interest to pay for the long-term care rider, is now tax-free. And it offers tax-free long-term care benefits. So if you look at this from a tax perspective, AnnuiCare really does offer the perfect tax combination. Now, those of you that have heard company representatives speak in the past, and I know all of you have, we have a character flaw. And our character flaw is we all do the same thing. We say, our product's the best in the business, and here's why. And I'm no different. I may be the worst in the country, but I'm going to say it differently. I'm going to say AnnuiCare eliminates the competition, and then I'm going to prove it to you. So let's move forward. One of the big differences is experience. We were the first guys on the block with this product, so we have 15 years of underwriting experience, 15 years of high issue rate. Incidentally, we are issuing over 80% of our submissions, which is significantly higher than traditional long-term care issue rates. We also have 15 years of policy owner and producer satisfaction, but here's the big one. 15 years with no premium increase for the AnnuiCare rider. So what we offered that rider for in 1999, when we first introduced this concept in America, it's the same price today. The end result of that means, and incidentally, that may be the only qualified long-term care that in the 15 years has had no premium increase. And the end result, we have the absolute best rate in the industry. Another big AnnuiCare advantage is called no long waiting periods. Now, we've seen some companies kind of come and go in the annuity long-term care space, and some have stayed, and they have, some of them have this issue with a waiting period, some as long as 2 years. So let me explain what these waiting periods mean. Let's say your prospect buys from company B, and they have a 2-year waiting period. They buy today, they get sick or injured tomorrow, they need care immediately. They would have to wait the balance of 2 years before they could even file a claim. Then they would still have a 90-day elimination period. AnnuiCare has no waiting period, only the typical 90-day elimination period. So same scenario, if they buy AnnuiCare today, get sick or injured tomorrow, they can file a claim immediately and begin to receive benefits after the 90-day elimination period. So no long waiting periods is a really big plus. Now, what I'm going to do right now, it's a little bit unusual. There are 4 companies that offer annuity-based long-term care in the independent agent channel. It's Guarantee Income Life, State Life, Forethought, and Lincoln. I'm going to compare these 4 products side by side. I'm only going to do this for one reason. I want you to be 100% confident that when you recommend AnnuiCare to your client, you're recommending it because it is clearly best in class. So there's 2 ways that we compare these products. One is how much long-term care benefit do you get per dollar of annuity premium, and that's going to be on the top half. And the bottom is, what are the future cash values going to look like? And the reason that's important, you know, folks, some people may just change their mind, and they may have to convert this into income, or if they pass away, this is the money that's going to be paid to their heirs. So let's start at the top. After the first year, and incidentally, we're working here with a male, age 65, depositing a $100,000 premium. After the first year, the AnnuiCare total benefit is started out at $300,000. It's grown to $306,000. The lowest of the 4 is State Life at $255,000, and then you can see Forethought and Lincoln fall somewhere in between. Now let's push that out 10 years. Now they're age 75. The total long-term care benefit with AnnuiCare will have grown to $367,000. State Life, again, the lowest of the 3 at $276,000, and Forethought and Lincoln fall in between. Now let's push it out 20 years. Now your client's 85. And folks, this is the sweet spot for claims to be filed. The AnnuiCare benefit will have grown from $300,000 all the way to $449,000. And in this case, at age 85, Lincoln is the lowest at $306,000, and Forethought and State Life fall in between. But none of them even close to the $449,000. So the point I wanted to make with the top half of this chart, when it comes to getting bang for your buck, and by that I mean long-term care protection per dollar of annuity premium, AnnuiCare is clearly head and shoulders above the competition. Now let's move down to the cash value section. What will that $100,000 look like in 10 years? Well, with AnnuiCare at current rates, it will have grown to $121,000. So at death, if they died in 10 years, that's what gets passed on to the heirs. State Life will be the lowest of the 4 at $104,000, and then Forethought and Lincoln fall in between. Let's go out 20 years. the AnnuiCare cash value will have grown to $149,000, and again, State Life, the lowest at $109,000, and Forethought, Lincoln fall in between. So I went through this to make a point. And again, and I wanted you to be, again, 100% confident that when you recommend AnnuiCare to your client, you can tell them this is the best in class, both in benefit for long-term care and future cash values. So let's move on. Also want to point out, AnnuiCare gives your clients the choice of dignity. And by that, I mean it pays full daily benefit for home health care. One of those 4 carriers only pays 50% of the benefit for home health care. This is really important because we call this stay out of the nursing home insurance. You know, nobody wants to go to a nursing home, and because we pay the full benefit for home health care, these people can stay in the environment that they're comfortable in rather than being in a facility and have their health care catered right into their home. So we believe that gives them the choice of dignity. I'm going to slow down a little bit now because what I'm about to go through is extremely important. You know, if you have annuities in force and they're out of the surrender period or almost out of the surrender period, and that money is not moving, it's remaining stagnant, it's collecting dust, and the reason is it has a 3% guarantee and probably no surrender period. And what they can get in today into an annuity, well, they can't get a 3% guarantee on a long-term annuity, and they would go right back into a surrender period. So you have 2 problems. One, the insurance companies don't want to take that business because they consider that to be not suitable to take somebody from a 3% guarantee that has no surrender period to probably 1% guarantee with a 10-year surrender period, so they don't want the business. That's one problem. The second problem is the consumer doesn't want to give up that 3% guarantee because they have no incentive to do so. Well, what I'm going to show you is a way, number one, to eliminate the tax on a tax-deferred annuity and also solve their long-term care needs at the same time. And remember, 9 out of 10 people don't have long-term care. Now, going back to what I said earlier, LIMRA has estimated that there's $1.8 trillion of non-qualified annuities in America, and somewhere over 1/3 of that is out of the surrender period collecting dust, and that money is not in motion. It's stagnant. So I'm going to show you how to alleviate that problem in your practice. What we're going to do is we're going to turn taxable annuity gains into tax-free long-term care benefits. And remember, this is going to appeal likely to 9 out of 10 people you talk to because they don't have long-term care, and most of them do own annuities. So here's the assumption. Your prospect, or perhaps it's your client, has a $100,000 annuity. Now, it may have been in 3 annuities over the years, but it had a cost basis. The original deposit was $50,000. So that means they have a taxable gain of $50,000. See, annuities are tax-deferred, not tax-free. So at death, the heirs are going to have to pay tax on that all at one time, or if the annuitant during their life withdraws money, they're going to have to, it's last in, first out, they're going to have to pay the tax on that gain before they can get any tax-free money out. So how do we eliminate that problem? It's very simple. 1035 exchange that money to AnnuiCare. And now that $100,000 is an AnnuiCare deposit. Guarantee Income will accept that money. We believe it is a suitable transaction, and here's why. Because the moment that $100,000 AnnuiCare deposit hits, guess what? They have a $300,000 long-term care benefit. So that solved the suitability issue. Now, and also, for the most part, it's going to solve the consumer issue because, you know, how long at 3% is it going to take to grow $100,000 to $300,000? Well, probably longer than you're going to live, but we can turn it into $300,000 of long-term care benefit right now. Now, here's the tax advantage. For that 70% of people that do go on claim, the claim is paid income tax-free. Now, remember I said earlier when I was showing you a diagram of how AnnuiCare works, the client uses their annuity value first before they use the rider. Well, that's a positive thing, and here's why. When they go on claim, the first thing that's going to come out of that annuity is interest, and it's going to be paid in a tax-free long-term care claim. So what happens to the taxable gain, that $50,000? We have eliminated it. So again, using this procedure, and keep in mind, there's $1.8 trillion out there, and it's looking for a home. And when you're in an interest rate environment that is low, don't sell rate, sell benefits. Sell them 3 times your annuity value for long-term care, and I'm going to eliminate the tax on your tax-deferred annuity. So folks, I hope you'll take that to heart because there's a real sales opportunity there. The AnnuiCare commission is 7.5 through age 74, and then it tapers down. I don't have the chart in front of me, but it tapers down just like all annuities do starting at age 75. Now, when you compare these products, there's really three things you look at. One is the price. What's the cost of the rider? At Guarantee Income, we have the best rate in the country. How much long-term care benefit do you get per dollar of annuity premium? And I hope on that comparison chart earlier I've proven to you Guarantee Income is head and shoulders above the competition. And then the third is, what are those future cash values? Well, in case they pass away, how much goes to the heirs? Or if they change their mind and they need that money for income, how much cash will be there? And again, Guarantee Income, head and shoulders above the competition. So we believe in all three of those areas: price, cash value, and long-term care benefit. Guarantee Income's definitely hit the bullseye. Now, I'm going to give you another sales concept, and this is for people that can't qualify for long-term care, because there's going to be that 18 to 20% out there that just can't get any form of long-term care because of medical history, medications they're taking, health issues, cognitive impairment, etc. We've developed a product called Flex Plus. It's issued through age 79, and just like its counterpart with AnnuiCare, the current portfolio rate is 3%. And I want to point out, all the products we're talking about today pay full accumulation value at death. So Flex Plus, for your prospects that can't qualify for AnnuiCare, Flex Plus is a guarantee issue product. There's no additional cost. The riders I'm about to walk through with you are at no cost. They're built in, and there's no underwriting whatsoever. Literally, you can sell this to somebody 79 or under, even if they're in a nursing home, and it generates real additional dollars to offset their long-term care expenses. Now, I'm going to go through the two main riders on this product that create benefit to offset long-term care expense. It's done through what we call enhanced annuitization. Now, in this product, you will see waiting periods, but remember, this is a guarantee issue product. The first benefit kicks in after 4 years. After the fourth contract year, if they fail 2 activities of daily living, they can elect enhanced annuitization. And what do we mean by enhanced? Well, that means that they could receive an annuitization amount as much as 239% of what the normal annuitization amount would be. And we have a second benefit that kicks in after 10 years. After 10 years, if they fail 2 activities of daily living and they elect this enhanced annuitization, we'll pay them a 10% bonus in their accumulation value, then start the enhanced annuitization, and that could give them benefits as high as 262% of what the normal annuitization amount would be. Now, the baby boomer generation loves this product, and here's why. They're not worried about going to the nursing home next year or 5 years or even 10 years, but they also know they're going to live longer. Well, the longer you live, the more the likelihood is at some point you're going to need care. So for them, this is off in the future. It's going to be benefit there when they need it, and there's no additional cost for it. So what I'm going to do right now is kind of walk you through a chart to put some numbers to this. Here again, we're using a male 65, $100,000 deposit. At the end of 5 years, the accumulation value would have grown from 100 to 116,000. Now, if they just chose to annuitize it because they wanted income, well, that income would be $7,763 per year. But because they failed 2 activities of daily living, they can get the enhanced annuitization. It's kind of like the doublers on some of those income riders. That $7,000 a year turned into $14,000. But it's for life, not until the cash value runs out. It's for life. Now let's go out to age 80. The accumulation value would have grown to $159,000, and if they chose to annuitize at that time, normal annuitization would have paid them $16,000. Now remember the 10% bonus. We're past 10 years now. So if they elect enhanced annuitization, we're going to give them a 10% bonus. That's $15,900. Pardon me. Now we're working with a higher accumulation value of $175,000. And the enhanced annuitization amount would be $25,000 as opposed to $16,000. So the difference between this number, $16,000, and $25,000, that's the extra dollars that are being generated to help offset long-term care expenses. And folks, it's really important that when you show somebody AnnuiCare, if they have some health issues and it's a little bit iffy, show them the Flex Plus too, and say, look, if we can't get the AnnuiCare, we can guarantee this Flex Plus, and prepare them at the point of sale just in case they do get declined. It'll make it easier for you to place the Flex Plus. Now, all these benefits are guarantee issue. There is no underwriting, and 100% of your prospects qualify. So I'm going to say Flex Plus is the ideal product for your prospects that can't qualify for long-term care. So here's a sales concept. Go to your files, whether on your computer or in your file cabinets, and pull out everybody who applied for long-term care and got declined. Then pull out everybody who may have qualified, but they were rated so high they decided not to accept it. And then just pull out the ones that have medical conditions that they didn't even bother to apply for long-term care. And here's how this works. You pull out the Jones file, and maybe they applied for long-term care a year and a half ago and they were both declined. You get them on the phone, Mr. and Mrs. Jones, I know a year and a half ago you both wanted to get long-term care insurance. It's very important that you have that, and I know there were some medical conditions that made it impossible for us to get it for you. Well, I've got some really good news. I'm excited to see you. There's something new now, and it generates real additional dollars to offset your long-term care expenses. And here's the best part. There's no physical. You qualify. When can we get together? And folks, I guarantee you if you do that, you will generate commerce in your practice almost immediately. So go to those files, pull out your declines, your rated up, and the people that were just so unhealthy they didn't even bother to apply, and show them this alternative to enhanced annuitization to help with their long-term care expenses.
Hey, David.
Yes.
A couple of questions came up along the way. I didn't feel comfortable just typing the answers in. If you have a minute here, I'd like to field a couple of those.
Absolutely. Let's do it.
Okay. On the AnnuiCare, it's a reimbursement. Does it reimburse on a daily benefit or a monthly basis?
It's reimbursement, and it's on a daily benefit. It's via receipts.
Okay. And if you're not maximizing the daily benefit, does that money stay in the annuity and pay out longer?
Yes, it does. So, for example, if they had the equivalent to a $200 a day benefit, but maybe they were using home health care and it only came out to $100 a day, well, then the benefit period would go from 6 years to 12 years.
Gotcha. Okay. What about care given by a spouse, or do you have to use like a home care agency for a bona fide expense for home health care?
Well, you have to have somebody who is certified.
Okay.
Now, we do have situations where spouses get certified, children get certified. In some states, that certification as a care provider is very easy to get. In other states, it takes a little bit longer. So some places that works well, in others it doesn't.
Okay, so as long as they're certified in the state where they reside to deliver that level of care, the policy will pay.
Exactly.
Okay. Elimination period for the AnnuiCare. There is not one, is there?
Well, no, there's no waiting period, but there's a 90-day elimination period.
Is that calendar day or service day?
That's calendar day.
Okay. And I recall, I think when looking through the product guide for AnnuiCare, that has some underwriting criteria in it as well? Like an underwriting type guide. Is that covered in the producer guide for the AnnuiCare product?
Yeah, in the AnnuiCare marketing guide, all that information is in there.
Okay.
Also in there is the medications that would make them ineligible.
The forbidden meds, right. Okay.
Right, health conditions, comorbids, the whole thing, weight chart.
Okay. All right. That was cool. Those are the questions I just wanted to get. And if you were to say, if someone were to ask you how many states is this approved in, or is it a real short list to list out the states where this is currently not available?
We're in most of the big states, so it's easier to go through the states we're not available in.
Okay.
And right now in Minnesota and Pennsylvania, we have applied, and we hope to be in those states this year. They're very important states. The states we're not in and are not applying in currently is going to be New Jersey, North New York, all the way up through the New England states. We are not in that area.
Okay.
We're pretty much in all the rest of the country with the exception of Pennsylvania and Minnesota, and we are currently applied in those states. Okay.
And with a current rating of AM Best of being B+, are you having another meeting with them again this year?
We are, and of course, as every year, we hope to bring the rating up. But just so everybody knows, AM Best uses what's called the BCAR system. That is their rating system, CAR standing for Capital Adequacy Ratio, and it's a point system. We have enough points on our BCAR system to be an A-rated company. But AM Best is very slow to, they're very quick to drop a rating, they're very slow to bring it up. But in terms of capital adequacy ratio, AM Best should give us an A rating, but they're not going to. It may be a couple of more years before we get into the A category.
Okay, great. that was the questions that I had posed. I didn't feel comfortable answering right off the bat. So are we about ready for a Q&A here?
Just a couple more slides and we're done.
Okay, all right.
You're looking at the Flex Plus commission. You probably saw that long enough. It's a quarter point less than the NuaCare, 7.25. And in closing, just a couple of things. We believe at Guarantee Income, the combination of a NuaCare and Flex Plus is really an important combination because we are the only company in America that has true annuity-based long-term care, but also we have a guarantee issue counteroffer for those that can't qualify. No other company in America has that. Now, really quick, I just wanted to give an honorable mention to our Guarantee 4. This is a 4-year, multi-year guarantee, no auto renewal, no strings attached. The current rate, and you know something? There's a flaw on that slide. We just raised that rate to 2.55%. So it's over 2.5%. That is the highest multi-year, 4-year multi-year guarantee in the country. But the real charm in this product is it's issued all the way through age 100. So please, everybody, make a note that rate is currently 2.55, just changed. And just in summary, Guarantee Income's strengths are fixed annuities with great rates. The NuaCare rider, the original long-term care rider attached to annuity that triples the value. We now have the Flex Plus, a guarantee issue product for those that can't qualify. With the exception of the MIGA, all of our annuities are a portfolio renewal style. That's a very popular renewal style when interest rates are low because as interest rates trend up, their rates are going to go up as well. So we believe we've built products you can sell in any interest rate environment. And in closing, Guarantee Income's reputation has been built on 3 things: service, experience, and innovation. We have been out there since 1926, and what you're going to find when you call our home office, you're going to get a really nice surprise. You're going to get to talk to a person. You will never be in your car punching in the first 3 letters of somebody's last name on your cell phone. And because of that service level, most service requests are handled with 1 phone call. And folks, we believe we have built innovative products that are going to fit your clients' needs today. So I want to thank you all for being on, and I'll turn it back over to Dave.
Hey, thanks, David. That was all just fantastic information. Right now I'm in the process of going through and unmuting everybody. So if you have any questions that you didn't have a chance to type in to me during the webinar and you'd like to ask David any questions about Gillico and the products they represent, now would be the time to bring those questions up.
And has gone on about that, and that's all I know.
Okay, so nobody has any questions? All right, we'll wrap this thing up. We did record this session, so it will be available for review later on if you need to look at it again. You can also feel free to give us a call up here at American Independent Marketing.
I have a question.
Go ahead, fire away.
Okay, thank you.
If someone has IRAs and has to start taking the minimal distribution, can they add to this each year?
Well, that's a great question. When you put an IRA into a NuaCare, we're going to make it we're going to transfer it to being non-qualified funds, so there won't be any RMD. So what we do is we 1099 them for 20% per year for 5 years. So we spread the taxes on the IRA out over 5 years. This way they don't have to take RMDs. It won't be qualified money anymore.
David, I also understood, though, that if you do have an NuaCare in force, you can add to that annuity over time, though, can you not?
Well, you can. If the cost of the rider ever exceeded the interest rate, then the benefits would begin to drop. They could make deposits to make up the difference to keep the benefit where it is. I can tell you it's never happened. We've not had the interest rates low enough that it wasn't enough to cover the rider.
Right.
But that ability is there in case interest rates get even worse than they are today.
Okay. All right, thank you. Any other questions out there?
Oh?
Yeah, I have one too.
Okay, go ahead, sir. I'll ask after you.
Oh, okay. You talk about 100,000 in the illustrations, but what is the minimum required?
Well, for non-qualified, the minimum deposit's $36,500.
Okay.
For qualified, the minimum deposit is $50,000. Just so you know, our average premium is $100,000.
Okay.
I have a question.
Fire away.
What happens if, like, you're in the second or third year of the benefit being paid to the long-term care facility or something and you die? Is there anything left?
Well, the annuity is going to be used up during the first 2 years, so the
Correct.
answer would be no.
Okay.
So if they're there for 1 year and they die, half the annuity value then would be passed on to the heir.
Okay. All right. Thank you.
And, you know, so something else as a follow-up answer to that.
Yeah.
Look at it a different way. Let's say somebody goes, they break their hip, and this does happen. They break their hip, they go to the nursing home for 2 years, they heal up, they get better, and they go home. Now, they've used up all of their annuity in benefit. For the rest of their lives, they still have the 4-year Annuicare benefit for the rest of their lives, and they pay no additional cost for that. That just is out there waiting for them.
So the question is then, if in the third year or the fourth year they come out of the nursing home and there's 2 years left, is that still theirs or is that gone?
No, that's still theirs. They
Okay.
still have all that benefit.
That's good.
Yeah, and no
That's very good.
additional cost for it.
All right.
Hello.
Well, thank you. Thank you very much.
You bet.
All
Okay.
excellent questions. That's great. Any other questions out there?
Yes, sir. I have one. First of all, both of you guys, as usual, simply outstanding. Thank you for being there for us agents.
Pleasure.
Thank you.
The other thing that I was very fascinated with, David, can you just repeat this one more time? You're saying because of the current interest rate on the annuity as it's growing over the years, that with respect to cost basis, that the cost of the annuity, as long as the cost basis is less than what the company earns on its portfolio, that kind of neutralizes their cost at all times. Is that not correct?
I'm not sure if I understand the question. Maybe I'm not smart enough to answer it. Try that again. I'm not clear on what you asked.
In other words, you said because the interest rate currently being paid on the annuity is, was it 2.5 something or 3 point something, that overrides the actual cost of the internal cost of providing the long-term care benefits, which was what, 1 point something?
Yeah, exactly.
0.95 cost basis for the benefits?
Yes, exactly. Let's say, for example, we have I'll look at my marketing guide right now just to show you what a great tool this is. You need to call American Independent Marketing and get one of these. But a 65-year-old, the cost of the rider is 95 basis points. Well, the interest rate's currently 3%, which means they're going to earn a net of 2.5%. Now, when you get up to age 70, it's 1.4%. So the younger they are when they do this, very similar to traditional long-term care, the lower percent they're going to pay for the cost of the rider. But you're correct, the cost of that rider is taken out of the interest that's paid by the annuity. So there's no out-of-pocket cost for them.
Now, with respect to what they call, this is as far as agents only, not to the public, of course. So is this an ongoing cost throughout the life of the annuity, or is this cost basically recaptured at some point to where basically it just, falls off after 3 or 5 years, you know what I'm saying, assuming it's had no claims?
Well, that percentage that they're paying for the rider is going to be for the life of the annuity.
Okay, so for the life. And then also you brought up a very interesting statement, which I didn't think, I never heard before, elimination period versus waiting period. Can you explain that again? When you say, in other words, is the waiting period mean that's the minimum that a customer must wait before they can file their first claim for the LTC benefit versus the 90-day, which is before, based on the qualifying events?
Well, the waiting period is how long they have to wait before they can file a claim after the policy is issued. So if it's got a 2-year waiting period, like some do, if they buy it today, even if they get sick or injured tomorrow, they have to wait the balance of the 2 years before they can file a claim. Now,
plus the 90 elimination period.
Plus the 90, exactly. The Annuicare has the 90-day elimination period that has no waiting period. They can file a claim immediately.
Outstanding. Those are very informative technicalities, and thank you, both of you gentlemen.
Pleasure.
I have a question.
Fire away, please.
if during the first 2 years you're using the benefit at 50% of what it would pay out as the maximum, and you died in the first year, would you not, or actually died in 2 years, because you'd only used half of that benefit over the 2-year period, wouldn't there be a death benefit available after that?
Absolutely. Yeah, absolutely. Any value that's left in the annuity that was not used in claim is a death benefit.
Okay.
Thank you, gentlemen. Outstanding. You guys have a nice day.
Hello?
Any other questions? All
Yes, I have
really
one.
good questions. Go ahead, fire away, please.
What if they annuitize it if they go along 20 years and they're 85, they realize they need the money now, and they annuitize it? What would the benefits be then for going in a nursing home at, say, age 90?
Well, if they change their mind and the emphasis was on income opposed to long-term care, then they lose the long-term care rider's gone. If you annuitize it, you no longer have the annuity rider.
I see.
And don't see that as a negative. Actually, I see it as a positive because, so when you run out of income and the pantry's empty, nothing else matters. You have to eat. So the AnnuiCare can be annuitized, or it can be, you can drop the rider, switch it to an income mode, do whatever you want with it, and it gives them financial agility. And nobody knows what the future's going to bring, but having agility in your products is very important.
All right, cool. All right, thank you everybody for taking the time to join David and myself this morning. We do appreciate your joining us. We honestly do appreciate the questions you popped at us. That's really good not only for our knowledge, but also for the rest of the people on the call itself. Again, like I mentioned, we did record it, so we will have it for future viewing for review purposes. And feel free to give us a call at any time if you have any questions. Or if you'd like to see an illustration for the AnnuiCare product, we can get those for you lickety-split quick. But David, thank you once again. It's always a pleasure doing webinars with you, and everybody have a great weekend. Thank you.